Bitcoin. The name sparks curiosity, debate, and strong opinions. Over a decade ago, it emerged as a radical new idea from the digital ether. Bitcoin wasn't just software. It reimagined what money could be, challenging financial conventions. In this video, we'll explore its mysterious origins, the technology behind it, and why it matters today. We'll look at how it went from an obscure white paper to a global financial phenomenon. Bitcoin's story is one of innovation and disruption, reshaping how we think about value and trust. We'll break down its core mechanics, its decentralized nature, and its role as a hedge against economic uncertainty. Whether you're new to Bitcoin or seeking deeper insight, this guide will cut through the jargon and reveal the essentials. In a world transformed by digital technology, understanding Bitcoin is more relevant than ever. Let's dive into the journey of the original cryptocurrency. The story of Bitcoin is one shrouded in mystery, innovation, and a touch of rebellion. It all begins with the enigmatic figure known only as Satoshi Nakamoto. To this day, the true identity of Satoshi remains unknown, fueling speculation and adding to the mystique of the digital currency's origin. In 2008, Nakamoto published a groundbreaking white paper, a document that would lay the foundation for a decentralized financial revolution. This white paper meticulously outlined a peer-to-peer electronic cash system, a novel approach to online transactions that eliminated the need for traditional intermediaries. This revolutionary idea arrived during the height of the global financial crisis, a period of widespread economic uncertainty and distrust. It was a time when trust in established financial institutions, banks, and governments was at an all-time low, creating fertile ground for alternative solutions. Bitcoin was ingeniously designed as a transparent and immutable system, a censorship-resistant currency, free from the control of any single entity. It was governed not by individuals or corporations, but by the unyielding logic of code, ensuring a decentralized and democratic network. The Bitcoin network officially launched in January 2009, marking the genesis of a new financial paradigm. This momentous occasion was symbolized by the mining of the Genesis block, the very first block in the Bitcoin blockchain. Embedded within that first block was a subtle but powerful message: Chancellor on brink of second bailout for banks, a direct reference to a headline in the Times newspaper from that very day. This message served as a clear statement of intent, a declaration of Bitcoin's purpose, and its critique of the existing financial system. Bitcoin's core concept was undeniably revolutionary. It offered a vision of digital cash that could be sent directly between people, anywhere in the world, bypassing the need for traditional banks and financial intermediaries. Crucially, Satoshi solved the long-standing double spending problem, a challenge that had plagued previous attempts at creating digital currencies. This was achieved using a distributed timestamp server and a novel mechanism known as proof of work, which secured the network and validated transactions. Early adopters, cryptographers, and those who were deeply disillusioned with the perceived failings of traditional finance, they saw Bitcoin as far more than just lines of code. It represented a burgeoning movement, a potential financial revolution. The anonymity of its creator, Satoshi Nakamoto, only deepened the intrigue and fueled the imagination of those drawn to this new technology. Bitcoin's launch marked not just the creation of a digital currency, but the beginning of a new era in financial sovereignty, empowering individuals and challenging the established order. At Bitcoin's core lies a groundbreaking mechanism known as proof of work, or POW. It's the engine that drives the entire system, ensuring its security and integrity. A robust consensus system that secures the network against attacks and ensures that all participants agree on the state of the blockchain. It's the foundation upon which trust is built in this decentralized world. Miners, the guardians of the blockchain, compete to solve complex cryptographic puzzles, dedicating significant computational power to the task. And the first miner to successfully solve the puzzle adds a new block of verified transactions to the ever-growing blockchain, a public and immutable record of all Bitcoin activity. This process, while vital for security, is undeniably energy-intensive, requiring vast amounts of electricity to power the mining operations. This high energy cost makes malicious attacks prohibitively costly, effectively protecting the network's integrity and ensuring its resilience against potential threats. In return for their efforts, miners are rewarded with newly minted bitcoins, incentivizing them to continue securing the network. They also receive transaction fees paid by users to prioritize their transactions, further motivating miners to maintain the system. This combination of block rewards and transaction fees incentivizes them to maintain the system, ensuring its continued operation and security. When you send Bitcoin to another user, your transaction is immediately broadcast to the entire network of Bitcoin nodes, where it is validated by numerous nodes, ensuring its legitimacy. The transaction is then placed in a mempool, a waiting area for pending transactions awaiting inclusion in a block. Once a miner successfully adds your transaction to a block, and that block is subsequently confirmed by the network, your transaction becomes secure, irreversible, and permanently recorded on the blockchain. This decentralized process ensures that no single party has the power to control or manipulate the ledger, fostering trust and transparency. The dual reward system, block rewards and transaction fees, keeps miners actively engaged and the network robust, ensuring its long-term viability. Every single transaction is meticulously checked for authenticity, verifying the sender's digital signature. The system also confirms sufficient funds in the sender's wallet before the transaction is confirmed and added to the blockchain. The result is a secure, global payment network that transcends borders and traditional financial systems. It operates without central oversight, empowering individuals and fostering a more inclusive financial landscape. Proof of work is not just a technical mechanism, it's the backbone of Bitcoin's trustless system, ensuring its security and reliability. It's a unique blend of intense competition among miners and seamless collaboration between nodes, working together to maintain the integrity of the blockchain. This delicate balance ensures the network's reliability, making it a robust and dependable system for digital transactions. This is how digital cash works, a revolutionary approach to finance. It's secure, decentralized, transparent, and open to all, paving the way for a more equitable and accessible financial future. Bitcoin's blockchain, at its core, is a public, immutable, distributed ledger, a revolutionary concept. It's essentially an open record of every single transaction that has ever taken place on the network. Each block within this chain contains a bundle of verified transactions, and, crucially, a cryptographic link to the previous block, forming an unbreakable chain of data. Altering even a single past transaction would immediately break the chain, making tampering not just difficult but nearly impossible, thanks to the cryptographic security. The blockchain's inherent transparency allows anyone, anywhere, to independently verify transactions, while user identities are protected, remaining pseudonymous, adding a layer of privacy. Thousands upon thousands of nodes worldwide diligently maintain identical copies of the entire blockchain, ensuring there is absolutely no single point of failure within the system. Even if one node, or even a significant number of nodes, goes offline, the network continues running smoothly, making it remarkably resilient and inherently censorship-resistant. Furthermore, anyone with the technical know-how can run a node, further reinforcing the system's fundamental decentralization. A key feature and perhaps one of the most important aspects, Bitcoin's total supply is permanently capped at 21 million coins, a limit that is hard-coded directly into the very core of the protocol. New Bitcoins are released into circulation at a predictable and steadily decreasing rate over time through a process known as mining. This inherent scarcity is absolutely central to Bitcoin's perceived value, frequently drawing direct comparisons to the precious metal, gold. Unlike traditional fiat currencies, which can be printed by central banks seemingly at will, Bitcoin's supply is absolutely fixed and transparent. This fundamental design inherently protects against inflation and the potential for currency devaluation over time. The blockchain's robust structure and its built-in scarcity are truly the bedrock and the very foundation of Bitcoin's enduring appeal. Ultimately, it represents a ledger for the entire world, transparent in its operation, incredibly secure, and inherently finite in its supply, and this is precisely what sets Bitcoin so distinctly apart from the world of traditional money and finance. Decentralization is Bitcoin's defining trait. No central bank, no government, no corporation controls it. Control is distributed among users and miners, with changes made through consensus. This structure prevents censorship and empowers individuals to control their own assets. Bitcoin's capped supply makes it a potential hedge against inflation, earning it the nickname digital gold. It enables global, borderless payments. Anyone with internet access can send or receive Bitcoin, bypassing banks and high fees, For billions without access to traditional banking, Bitcoin offers a way to store value and participate in the digital economy. All you need is a smartphone and internet connection. By giving people direct control over their money, Bitcoin fosters financial inclusion. It's a tool for economic empowerment in a connected world. Bitcoin's halving is a key feature every 4 years. The reward for mining new blocks is cut in half. This started at 50 Bitcoins per block, and has dropped to 6.25, with future reductions scheduled. The halving mimics the scarcity of gold, making new Bitcoins harder to obtain over time. This controlled supply slows inflation and increases scarcity, supporting Bitcoin's long-term value. Each halving is predictable, creating supply shocks that often drive price surges. These events attract attention, bringing new users and investors into the ecosystem. The halving is both a monetary policy tool and a recurring catalyst for market excitement. It's a built-in mechanism that reinforces Bitcoin's scarcity narrative. As supply tightens, demand dynamics become even more important. The halving is central to Bitcoin's unique economic model. Bitcoin faces criticism for its high energy use. Proof of work requires significant electricity, raising environmental concerns. Its transaction speed is limited, handling far fewer transactions per second than traditional payment networks. This can lead to congestion and high fees, making small payments impractical. Price volatility is another challenge, with dramatic swings that deter some users and businesses. Bitcoin's complexity and association with illicit activity also pose barriers to adoption. Though blockchain analysis has improved transparency, developers are working on solutions, like the Lightning Network, to address these issues and improve usability. By 2025, Bitcoin has gained significant institutional adoption, shifting from a niche experiment to a recognized asset. Major companies and investment funds now hold Bitcoin, viewing it as a hedge and a reserve asset. Regulated investment products like ETFs have made Bitcoin accessible to mainstream investors. Governments are exploring Bitcoin for payments and regulation, adding to its legitimacy. Bitcoin remains the dominant cryptocurrency, leading the market in value and influence. Its network effect and security keep it at the forefront, despite thousands of competitors. Both retail and institutional investors are drawn to its unique properties: decentralization, scarcity, and borderless access. Bitcoin is now seen as a distinct asset class, offering diversification and a potential safe haven in uncertain times. Bitcoin's legacy is its role as a digital pioneer, the first successful decentralized currency and the origin of blockchain technology. It has inspired thousands of cryptocurrencies and sparked global debate about the future of money and trust. Bitcoin's resilience is remarkable, surviving market cycles, regulatory scrutiny, and technical challenges. Its decentralized design and passionate community keep it evolving and secure. Upgrades like Taproot and the Lightning Network are improving scalability and privacy. Bitcoin's journey from white paper to global asset is a testament to its innovation and enduring appeal. Its impact on finance and technology is already profound, empowering individuals and challenging traditional systems. The story of Bitcoin is still being written, a digital experiment shaping the future of value.